Frank Ehrhardt, John R. Wood Properties, Christie's International. Today I'm sitting down with Jamin Eastman from Chapman Insurance, and we wanted to talk a little bit about what's happening in the insurance market here in Southwest Florida. It's been about 2 years since we last sat down and talked, and there's a lot I'm sure that has happened, and wanted to get your take on what are we looking at in today's market.
It has been. I think the last time we were talking about Ian cleanup, and now, thankfully, most of it's cleaned up. So the insurance market has kind of followed suit. There have been another number of changes. Certainly, this past year's relatively inactive storm season was, a breath of fresh air, sigh of relief for insurance companies and insurance policyholders alike. But looking back even a couple of years, around the time that we were talking, there was some legislative action at the state level that I think I said, hey, this is good news, but it's going to take a couple of years for that to actually start impacting the bottom line of insurance companies and incentivizing them to be a little bit more aggressive. And thankfully, that's what we have seen. This past year, we have started to see a couple of different things. For a long time, there's been money waiting on the edges of Florida, waiting to come and invest in the property insurance market, but we're really kind of biding their time until the legislative mess got cleaned up. So new companies have started to come in. I want to say we probably have a half dozen companies and more to come. Those are new entities.
Wow.
There's also been a dramatic expansion from existing companies, really good quality, well-tested companies that have been around for a long time in terms of the Florida property insurance companies, but just haven't been interested in writing much business in our area, even prior to Hurricane Ian. One company in particular, great company, very competitive rates, good claims handling, and I think in the last 3 or 4 years, unless you had a home that was built within 5 years, they just weren't an option. New construction. So we started to see companies like those remove age limitations on construction as an underwriting eligibility concern. We've started to see roof ages. Everyone got used to, oh man, if it's a 15-year-old roof, I don't know what I'm going to do. Right, that's right. Now we're starting to see even shingle roofs, 15 or 20 years.
Oh, wow. Great.
That's starting to become not just a one-off situation. Tile roofs, 25, 30 years, metal roofs, even longer. So
that's fantastic news, because we talk about misconceptions in the marketplace, and again, you and I haven't chatted for 2 years, and so the roof limitations, I kind of thought after 15 years, you're pretty much done if you've got a shingle roof. So, and I'm in this every day, and as you are, and obviously very well aware of what's happening. So what are some of the misconceptions? I'll start off by saying we still see people on social media saying, oh, well, I might not be able to get insurance in Florida. And I've never encountered that. And so what are some misconceptions that maybe we need to clean up here?
Yeah, so some of it is relying on historical data, right? If you search online, you're going to get a lot of Florida insurance, homeowners insurance. You're going to get a lot of stuff that may look relatively, if I'm reading an article from a year ago and I don't know anything, I'm going to say, that's probably still true, right? So some of it may be a reliance on historical data or what your neighbor told us. Misconceptions, we'll get into some of the misconceptions on insurance policies themselves. But I think there's always been competition between the market just moves so fast, so there's a competition between what historically has been true. And when I'm talking current, I mean, we're still coming in this week and finding out, oh, there's been a new easing of underwriting guidelines in one area or the other. So even if we have this conversation, 6 months from now, I may have a different story to tell you.
And we may need to sit down more often than every two years after this as well. I'm going to jump around a little bit here. So I had a conversation with Jamin yesterday, and we were talking about a flood policy. I've got a seller that is listing their home, and they don't have flood insurance. The map recently changed, I believe, to include just a tiny portion of their lanai cage in the flood policy. And so Jamin reached out and found a policy for us, and I was shocked at how low it was. And so, and low being it was in the $1,300 or $1,400 a year range, but I thought that was substantially lower than what my guesstimate was going to be. So, kind of what's happening in the flood world right now.
Yeah, so flood is continuing to be, there's solutions, but it's kind of the problem child of the insurance industry right now. The federal shutdown, which FEMA writes 90% plus or minus of all flood insurance, certainly didn't help people's confidence in the stability of our flood insurance market. But after Hurricane Ian, a lot of private flood companies that were always available, it's just sometimes their rates were competitive, sometimes not,
right?
Just said that scared them, right? We had widespread catastrophic flooding in areas that historically hadn't seen widespread catastrophic flooding. So a lot of those companies pulled back and are now re-entering the market a little bit more conservatively, but are specifically interested in areas where Ian was a pretty good stress test in terms of, is your house prone to flooding?
Right.
So are starting to get back in there. So FEMA prices, for that house, when we looked at it, the FEMA was 2 or 3 times as expensive than the private flood market. That's not always going to be the case.
Right.
And we're still operating under this, FEMA changed the way they write flood insurance, or at least the way they rate flood insurance a couple of years ago. And I'm still running into situations where, and will be for a couple of years, where if there's an existing FEMA flood policy from the seller of that house, that we can assume, even if it means you got to pay a little bit extra over a private flood policy, I'm going to ask you to at least consider that, because private companies have the ability to come and go as they want.
Good point.
Yep. And if you leave a FEMA policy and want to come back a year later, all of a sudden you're paying 3 times as much because you're in their new program.
Yeah, and that's for folks that aren't aware, that is being able to assume a flood policy from FEMA is huge, because we're still seeing some of those policies that can be assumed in the $1,100-$1,200 a year range, and so. And if they were to go and write that new policy, they're probably going to be $3,000 to $4,000. Is that maybe a little bit more?
I'm working with one right now down on the coast in the 34102, so down in the Moorings, Port Royal area, and a new FEMA policy would be just over $11,000.
Wow!
Or we can assume the seller's policy for $950. So it's a
great savings.
Yeah.
Great savings.
Worth looking at.
Okay, good. So a couple of years ago, I used to be able to fairly well guesstimate what an insurance policy was going to be. And so nowadays, I don't even attempt that. One of the things I try to do is, if I've got a buyer looking to get an insurance policy, I try to get that quote in that first 10-day inspection period, so there's no surprises later. So why don't you talk a little bit about differences between somebody having an insurance policy as their primary residence, as a secondary home, or possibly even using it as a short-term rental.
Yeah, and there are considerations. There's a couple different policy forms. They're all homeowners policies, but it may have to be written on one form or another. The bigger consideration, the bigger surprise, I think, both for buyers and for lenders, is what constitutes a primary. If I were to ask you, if you're going to be a primary resident of the state of Florida, what does that mean to you?
I would say 6 months and a day.
6 months and a day. Yeah, that's every financial advisor in the country that's what they're saying. For flood insurance, that's true. If you're there for 6 months and a day, we can call it your primary residence. For homeowners insurance, and this is across the board, every single carrier that's writing, primary occupancy requires 9 months of occupancy by the owner. Now, if you've got a situation where maybe one spouse is still working up north and traveling, that's fine.
Yep.
But it requires 9 months. So in order to properly rate flood insurance, I had this with a client the other day. This is my primary. I'm setting it up for estate planning purposes. I said, 6 months in a day, we're going to have to call this a secondary home. And he wasn't concerned about the price difference. It's a small surcharge for it to be a seasonal or secondary home usually. But he was concerned about implications for tax purposes. And I said, let's look over the underwriting questions and the definitions of primary. what you're setting yourself up for is you're paying a little bit more for a really good policy that's going to do you no good in the event of a claim if we misrepresent the occupancy.
Interesting.
So that we get that a lot with people coming in from out of states who are coming here for tax advantages. The other scenario that we run into very commonly with the same set of people are, I've got my home empty for 3 months, 6 months out of the year, and I'm not going to rent it, but I'm going to let family come down and stay.
Yep.
It's not rental.
Yeah.
Rental exposure is any occupancy, long-term occupancy by someone other than the insured, the owners of the property, when the owners aren't there. So if I'm away and my adult children decide to come down and bring their kids, hopefully a couple of years down the road, I don't have grandkids yet, but they decide to bring their kids with them and stay there for a month, even if I don't charge them a dime, that's rental occupancy. And I get the question, so what's that going to do? Are they going to deny my claim? And it gives companies grounds to start the claim. They're going to look at the nature of the claim, right? If a hurricane comes, that hurricane was going to come regardless of who was in the house or if anyone was in the house. If a fire is started, you can guarantee they're going to say, well, who called in the fire department I want a copy of the fire report from the marshal. And if it was someone that shouldn't have been there is very strong grounds to deny that claim. And we've seen that happen a couple of times.
Interesting. So one of the things we had talked about before we started filming was the differences between some of the policies that are out there in terms of more expensive, less expensive. And so used to be, well, maybe we'll just take the less expensive policy. And so kind of in line with that, what's the difference between some of these policies and what should people be aware of?
So one of the misconceptions is that the more expensive policy is not always the better policy. I can think of one or two companies in particular that they are very, very picky. When I'm writing a policy, they want to inspect every pipe and make sure, roof and all of that kind of stuff. They're very thorough, but as a result, their loss ratio is much lower, and they pass those savings on to their clients.
Interesting.
So this is there's a lot of good independent agents in town. I think we're one of them.
Yep.
We're one of the largest, and so we have access to pretty much every company. But getting back to your original question, what's the difference between a cheap policy and an expensive policy? Potentially nothing. What's really more important is that there's a conversation had between client and advisor. So the buyer knows exactly what they're getting, what they're insuring, what they're deciding. It's not worth the cost for me to insure.
Right.
Because I can sell you a really cheap policy that covers nothing, but I can also give you what seems like a great rate that's a very robust policy. So we're seeing a pretty good shift away from the days of, hey, just give me a cheap quote and I'll be happy with it.
Right.
Some of that has to do with buyers are much more educated,
right.
And asking tougher questions. But we are seeing a shift towards people want to go back to more of an advisory relationship, which is great for us. So that's our ideal client.
And that's a great point too, because like you said, you can get a cheaper policy, but does it cover your pool cage if you have a pool cage? If it does cover the pool cage, how much of that pool cage is it covering?
Mm-hmm.
What's your deductible if you were to have a hurricane? What is the hurricane deductible? And so it is really important to have somebody that you trust on your insurance side, making sure that they're looking out for your best interest. And certainly Jamin has done that for me for years. I can't remember how long back it's been, but I would say probably 7 or 8 years that we've been working together, and it's been fantastic.
Well, thank you. I appreciate the compliment.
Absolutely.
And the compliment of your referrals.
Yeah. So we've been down here for 16 years now, and one of the things when we came down here, we didn't know anything about Florida. We didn't know anything about insurance. We kind of took a flyer to come down here, and they're very happy with our decision. But we didn't have any impact, any storm protection or impact windows in our house. And so first thing I did when we got down here, it was in June. We're like, well, let's get storm protection up. And so we paid somebody to come out and put storm protection up. I contacted my insurance agent at that time, and I said, well, what am I going to save on insurance now that I've put this in? And his response was, well, nothing. You've already maxed out your credits for storm protection. And so I thought that was interesting, and we were just talking that can still happen today. So what are your thoughts on how people can try to help mitigate storm protection, and what things should they look at? And should we contact our insurance advisor and say, hey, I'm thinking about doing this. Is it worth it to do it?
Yeah. So should I contact my insurance provider? Absolutely, or advisor. If your insurance provider is only writing you policies, they're really only doing half their job. So we're always a great resource. We like to educate people, but our big ask is when you've got a question, use us.
Yep.
Know the right questions to ask in your industry, and then send them our way, and that's a value that we can add. So we're dealing with a similar situation right now. Working with a client purchasing a home in Bonita Bay, beautiful home, but it's got those metal, the metal corrugated panels that you put on. And so he had gone to a contractor, assuming, well, if I replace all the windows and sliders with the latest and greatest impact ones, it's going to save me a bundle of money. And I looked at his wind mitigation inspection, which is what kind of outlines the mitigation factors that impact insurance prices. And I said, well, you're welcome to do it. It's about $130,000 bill for all of these windows.
Yep.
Pretty big house.
Yeah.
You're welcome to do it. It'll make your house look nicer for sure. It'll be easier to prepare. You're not going to have to hang someone or hire someone to hang. But it's not going to change your premium any, because the insurance carriers for that particular aspect of the mitigation, they don't really care how an opening is protected. They just care that it's protected.
Right.
So the ugly panels are going to get you the same discount as the pretty windows, but it all comes back to having an advisor that's going to do more than just get your inspection, translate that onto an insurance policy, and then say, here, this is what you can buy. But someone who can look at the details and say, what we see very often with that particular one is you're not getting the discount, but it's, we'll see on the listing, impact rated all the way around, but they've got one skylight that's not rated, or, a garage door with a tiny little window in it. Buy something and cover that up, and it's going to save you a couple grand.
Yeah, so that's a good point. And so it's for storm protection, it's all or nothing. Mm-hmm. And so if you have one unprotected opening, you do not get the benefit of having every other window or every other opening in the house. You don't get that discount until that last piece is completed.
Yeah, and the other big one that we see that will show up on a wind mitigation is the way the trusses of the house attach to the walls of the house. So very often you'll see homes with hurricane clips or straps, but code was changed 12 or 13 years ago to say we now require 3 nails, and there's only 2 there, so you're getting nothing. And that's there are people around that's what they do.
I was going to say, there are businesses out there called third nail, and so if there's only 2 nails in your how it's attached from the sidewall to the trusses, they will add that third nail. And it's a pretty substantial savings if you've got that third nail. For sure.
So, yeah. The recapture time period on that time is sometimes less than a year.
I was going to say a year.
It costs you $1,000 to do the work, and you're saving 2.
Yeah.
But at the very most, it's 2 or 3 years before you're starting to recapture that investment, because that discount carries forward forever.
Forever. Yeah. Great. But one of the things that we've noticed, we've become accustomed to having insurance policy pricing going up year after year. It's just part of being here, and you get complacent. So every year when my policy comes up, I reach out to Jamin and say, hey, is this the best that we can be doing right now? And so one of the things that we've seen, I think, is that this year, I think my policy actually stayed about the same, and so which is great news. And so, what are your thoughts on what's happening with pricing?
Yeah, so we've been having a little bit of a conversation about the cost of insurance and things that you can do to mitigate that cost. But we've been writing a lot of policies as an agency for the last 5 years or so, and a lot of those conversations go something like this: listen, this is more expensive than it needs to be, or you're giving up some coverage that maybe long term you want, but this is the best that's available right now. Right? And it's a sad state. It doesn't feel great as an advisor, but it's the reality of where we're living, and that's changed. And so a lot of people have gotten used to, the average rate year over year increase across all companies across the state was like 35% for a couple of years.
Wow.
And now people are getting them, getting their renewal offers, and they're a couple of points up, and they're thinking, this is great. But what they forget is, but my price has doubled or tripled over the last 5 years. So one of the best things you can do is just take a look. It's a great time to reevaluate. When we have the conversation, it's not just, is this the cheapest we can do? It's, are there better quality companies out there? Price is a factor. One of my neighbors down the street, he's got a policy with a decent company, but it's got all kinds of limitations. No screen enclosure coverage, $10,000 cap on water damage, and he's paying like 12 grand for it.
Wow.
And we were able to. We're in the process right now of binding him a policy. It's going to save him probably $4,000 or $5,000 with a better company with better coverage. All of those holes have been filled. So, you asked first, cheaper policy versus more expensive policy. Sometimes the cheaper policy is actually the better policy.
Right.
You just don't know until you ask the question.
Right. Yeah. One of the things that we've seen over the last couple of years too is HOAs for condos. The HOA fees have just skyrocketed here, and it's in the news all the time that's happened. And so we're coming up on their annual years, and so we've actually started to see some associations that have had HOA fees dropped, and one of the biggest drivers of the HOA fee is insurance. So what's happening with the HOA policies now?
Same kind of thing, commercial, and it's commercial wind coverage has been the big limitation. I don't deal directly with a lot of HOAs, but I sit on the board for our church, and we made the decision 2 years ago. Nobody felt great about it, but the cost for the policy had gone from about $120,000 for $25 million in coverage to about $500,000 for a $2 million slice after a huge deductible.
Wow.
So nobody felt great about saying it, but we decided it's not worth the cost. So we're going to self-insure. HOAs don't have that option. But we purchased a wind policy this coming year because we checked the market, and again, because of legislative action, because the storm surge season probably wasn't the cause, but it certainly didn't hurt.
Right.
We're starting to see those rates come down. So hopefully we get some relief on the HOA. If you're on the board of your HOA, ask them when the last time they shopped their wind policy, and you may find you're doing yourself a favor.
Yeah, I think that's great. So if you're a homeowner and you haven't shopped your insurance recently, reach out to your insurance guy before your renewal comes up. Make sure that you are getting the best deal that's possible. If you don't have an insurance guy you can trust, you need to find one. And so again, Chapman Insurance and Jamin Eastman here, they've been great for us and my clients as well. And so highly recommend again. So good news for our real estate market here. It has been cold and snowy in Chicagoland, where I'm from. I watched the Buffalo Bills game a couple of weeks ago. There was snow on the field. People are going to start thinking about Florida again if they've stopped thinking about Florida. So as a buyer coming down, what are some of the things they should consider as they look for insurance? And as a seller, what should they look to have prepared as they start to think about listing their home?
So if you're going to sell a home, I would say have your insurance information ready. We're still not at the point where I say show your insurance policy, at least your homeowner's insurance policy, to a buyer, because there are so many variables that go into that you don't want to misrepresent the home. But if you're a seller and you're locked into a policy that you've had for a couple of years, and you're not moving, or you're not really happy with the price, have that policy shopped. Work with the listing agent, because if I show you, if you've got a listing and the house has a $10,000 home insurance policy, that could scare off some buyers.
Absolutely.
And so I'm probably not going to suggest you rewrite your homeowner's insurance policy if you've got it listed. Most companies don't like that. But it would at least give you something else, a little bit more relevant, accurate information for a potential buyer that could help. And then we talked about the assumability of flood insurance policies. That if you've got a flood policy written more than a couple of years ago and your neighbor doesn't, I can almost guarantee you your house is going to sell faster, unless you're just looking at cash buyers.
Yeah, one of the things too to consider. So now we've made it through another season without any hurricane implications this year, and so if you have that FEMA policy and you're paying $1,200 a year, make sure you renew it. Do not let that thing lapse, because even though you're thinking you're not going to be here for next summer, you're going to avoid the hurricane season, the person that's buying your house is going to get a far cheaper insurance rate for flood than if you don't have that policy.
Absolutely. Yeah, I've gotten a couple people that after Ian, well, I didn't have any flooding, so therefore I don't need this policy.
Right.
But a bank's still going to say to a buyer, you have to have a policy because
Right.
of the flood zone. So
Exactly.
I've encouraged them, just as a insurance policy for a future sale,
Yeah.
hold on to that thing.
Absolutely. Interestingly, there are going to be lenders that need to have a lower insurance price, and so maybe the buyer doesn't qualify or needs a lower rate to qualify. I think it is important that the lender, the insurance, and the agent all work, real estate agent, all work together to make sure that we've got the best policy for a buyer coming down as well.
Yeah. And that's one of the things I've enjoyed about our relationship over the years. And I'll throw Nathan in there as well. Is we're working as a team to serve the client. And
Yep.
sure, we all want, for our own purposes, the deal to close.
Yep.
But sometimes deals just shouldn't close. And we run into this all too often, where we'll get a call from a lender. Hey, they've got a razor thin debt to income ratio, and we're trying to get them into an $800,000 house.
Yeah.
Listen, now the basics of insurance is it's there to offset exposure based on the need of the client. And sometimes the client needs a cheap policy, but way too often we just see we're trying to force a closing through that really is leaving a buyer extremely exposed
Yep.
to a storm. We're going to have another busy storm season at some point.
Yeah, and I think we talked a little bit about this off camera, was that people didn't really think much about their insurance policies previously until the storm, or until you needed to file a claim and you realized you didn't have the right coverage, or maybe you weren't covered at all for something. So we're going to talk a little bit about what you've seen over the last couple of years here.
Yeah, Ian was the best education that no one asked for. Insurance broadly was, for a lot of people, a necessary evil.
Yep.
My bank is telling me to do it, or the Florida Department of Motor Vehicles is telling me I got to carry auto insurance, and so I do, right? But other than that, I only know the premium, and that's all that matters to me. And if that's the case, cheaper is better, right?
Mm-hmm.
Then Ian comes through, and all of a sudden, all of those conversations, it was a worst case scenario.
It was.
Flooding in particular. Just the months prior to Ian, so many people had said, listen, I've lived in this area for years and there's never been any flooding. I'm paying cash for the house. I don't want flood insurance.
Mm-hmm.
And it was heartbreaking to have to say, and now the unthinkable has happened and you've got no coverage for that.
Yeah, well, interestingly, so going back to, again, when I bought my first house here 16 years ago with my wife, I don't think we knew that flood was a separate policy from homeowners.
Yeah.
And so, and then, so this is in June, and by the time I talked to my insurance guy, at that point, it wasn't Jamin, unfortunately, I realized I had a 30-day waiting period for flood insurance too. So you can't sit on the sidelines waiting for the forecast to come in that we're going to get hit with a hurricane and all of a sudden put flood insurance in. And so correct me if I'm wrong, we've got a 30-day window where once you order that policy or try to get that policy, it doesn't bind for 30 days.
For FEMA, that's correct. Unless there's a loan transaction that requires it, there's a 30-day wait. Even if it's a new purchase, if there's no lender saying you have to have it, there's a 30-day wait. Private carriers, you can see some that'll lower that to a 10-day or a 14-day wait. So but the moral of the story is insurance carriers, whether they be home or flood, are a whole lot faster to respond to weather events that are incoming than homeowners are. Yeah. So I do have some buyers that this time of year, they're in a lower risk flood zone, or they don't have a lender telling them, say, I'm not sure about flood insurance. We'll say, well, let me put a reminder on my calendar for next March.
6 months,
yeah. Well before storm season, because you're right. As soon as something pops up, it's too late at that point.
One of the things I learned about Chapman Insurance probably a couple months ago, and was that you actually have your own claims department, which really differentiates you from many of the other brokers out there. So why don't you tell me why that was set up and how that's going to help somebody?
Sure. So that was a response to Ian, honestly. We've been growing as an agency for a while. I think when I was hired, I was maybe employee number 17. We're just shy of 100 now in office. We've got another 30 or so people out of state and overseas that do some of our admin work. But Ian was a good education for us as well. Florida insurance carriers are not large-scale national companies that have the ability to fully staff out claims departments. So anytime a storm happens and we've got hundreds of thousands of claims to be made, we're bringing in adjusters from all over the state who may or may not have any idea of what the cost is, of what coverage is in Florida, all of those kinds of things. And it's not their job to determine that. That's the job of the company's desk adjusters, but it can still make the process difficult. And so as we saw an enormous amount of our clients struggling through the claims process, we decided we need to do more than just the role of an insurance agent in a claim is not to adjust the claim. I don't have the license for it, but it's to make sure that it keeps going. If you're not getting a response from the adjuster, I'll reach out and give them a call. But sometimes it's necessary to go to bat a little bit more. And so we have licensed claims adjusters on our staff in our offices. And they're also not adjusting the claim, but they can help interpret policy language in the light of a particular scenario. They can speak on a more peer level with the desk adjusters at the carrier. And we've had great success with getting carriers to pay out more than they had originally thought. So
yeah, and again, I think many of the homeowners, whether it was a homeowner's insurance or flood insurance, struggled with dealing with the insurance companies. I think that's pretty widely well known. So I think that's a great step that you guys took.
Yeah, it's been a really great way to serve our clients.
Awesome. So one of the things that we need to be careful of, sometimes a seller may have a homeowner's insurance policy, and that's homeowner's insurance policy may be for $3,000 a year, let's say. And so, but when the buyer comes through and they get quotes for insurance, it may be $6,000. And so there's a big difference. And so you can't always necessarily rely on what the what the seller currently has in place. You really do need to do your own due diligence. And so what are some of the things that would cause it to be $3,000 from the current owner to $6,000 for the new buyer?
Yeah, we get this all the time. Or maybe it's just, I talked to my neighbor down the street and he's paying half of what I'm paying. Right?
Yeah, exactly.
So some of it could be availability of coverage. Trying to think of a good example. USAA. USAA is a captive carrier. They're the only ones that write it. So we write with pretty much every company doing business in the state of Florida, but we can't write a USAA policy. Yep. So that could be a difference. If the seller has a USAA policy and a new member or a new buyer isn't eligible, that's not an option for you. Some of it could be what we had talked about before. I've got a buyer who lives 12 months a year in this house, and therefore they're getting rated as a primary. My seller says, great, this is going to be my primary residence as well, but I'm going to be here 6 months and my kids are going to stay at the other. That's a different type of policy.
Right. Yep.
What I see very commonly, and policyholders are much more cautious about, relates back to that. Are you getting good advice on your policy, though? Way too often, I'll get a policy either from an existing homeowner who's just shopping their rates or a new buyer. And I'll say, well, this is great, but you've got a beautiful house that they're insuring for 150 bucks a square foot. There's no contractor in town that's building prices at that, homes at that price. So
that's a great point. So if a homeowner hasn't recently reviewed their policy, and so 7-8 years ago, you could probably put up a home for $150 or $200 a square foot, and now I don't think you're touching anything for under $300 a square foot, and so that could be one of the big differences too. So, and you don't know that necessarily looking at well, what's the premium that the current owner is paying.
Yeah.
Jamin, thanks again. I appreciate you taking time out of your day to come chat with us today. And so Jamin's contact information will be below. My contact information's below as well. If you need an insurance advisor, I highly recommend Jamin and Chapman Insurance. Any questions about today's conversation, Jamin will be happy to answer any questions that come up.